Copper just hit its highest price ever, but what does it mean for your money? The price of copper has reached a new high of $10,000 per ton, and this could be an indicator of a strong economy, but also potentially higher inflation. In this video, we'll explore what this means for investors and how it could impact their portfolios, particularly in industries heavily reliant on copper. What specifically will you learn? You'll find out how to navigate this new development and make informed investment decisions. Copper is often seen as a gauge of economic health, and its price surge could indicate a strong economy. For example, in 2020, the price of copper was around $6,000 per ton, but as the economy recovered from the pandemic, the price increased to $9,000 per ton. Now, with the price at $10,000 per ton, it's likely that the economy is still growing. But this growth could also lead to higher inflation, which would impact investors. According to a report by the International Copper Study Group, the demand for copper is expected to increase by 2.5% annually from 2023 to 2025. And with the current supply chain issues, it's likely that the price of copper will continue to rise. So, what does this mean for your investments? If you have investments in industries that rely heavily on copper, such as construction or electronics, you may see an increase in your returns. But if you have investments in industries that are negatively impacted by inflation, such as bonds or real estate, you may see a decrease in your returns. For instance, a $10,000 investment in a copper ETF could potentially yield a 10% return, resulting in a $1,000 profit. However, a $10,000 investment in a bond fund could potentially yield a 2% return, resulting in a $200 profit. And the part that surprised me most is that this surge in copper prices is not just limited to the US, but is a global phenomenon, with countries like China and India also experiencing an increase in copper demand. But the impact on your portfolio is what we'll explore next. Additionally, back in 2015, the price of copper was around $4,500 per ton, but the demand for copper was not as high as it is today. Now, with the increased demand for electric vehicles and renewable energy, the demand for copper is expected to continue to rise. Furthermore, a common misconception is that the surge in copper prices will only affect the US economy, but in reality, it will have a global impact. For example, a company like Volkswagen, which is a major producer of electric vehicles, may see an increase in its production costs due to the surge in copper prices, which could impact its stock price. But the part that surprised me most is what this does to your 401k. Will your retirement savings be affected by this surge in copper prices? We'll dive into the specifics of how copper prices can impact your retirement portfolio and what you can do to protect it. For example, if you have a 401k with a significant portion invested in copper-reliant industries, you may want to consider diversifying your portfolio to mitigate potential losses. Stay tuned to find out how to navigate this new development and make informed investment decisions. Specifically, in the next section, we'll explore how the surge in copper prices could impact the stock price of companies like Tesla and Freeport-McMoRan and what this means for your investments. The surge in copper prices could have a significant impact on your portfolio, particularly if you have investments in industries that rely heavily on copper. For example, a company like Tesla, which uses a significant amount of copper in its electric vehicles, may see an increase in its production costs, which could impact its stock price. On the other hand, a company like Freeport-McMoRan, which is a major copper producer, may see an increase in its revenue, which could positively impact its stock price. According to a report by Bloomberg, the copper market is expected to experience a deficit of 300,000 tons in 2023, which could further drive up prices. So, what can you do to navigate this new development? You could consider diversifying your portfolio to include investments in industries that are less reliant on copper, such as healthcare or technology. For instance, a $10,000 investment in a healthcare ETF could potentially yield a 5% return, resulting in a $500 profit. And the historical comparison is interesting. In 2011, the price of copper reached a high of $10,000 per ton, and the S&P 500 index increased by 2% in the following month. But the misconception to correct is that the impact of copper prices is limited to the US. It's a global phenomenon. Additionally, the surge in copper prices could lead to an increase in the production of other metals, such as aluminum or steel. For example, a company like Alcoa, which produces aluminum, could see an increase in its revenue due to the surge in copper prices. Furthermore, back in 2008, the price of copper decreased by 50% in a matter of months, resulting in significant losses for investors. Now, with the current surge in copper prices, investors may want to consider taking a contrarian approach and investing in companies that are less reliant on copper. But the crucial part is how to respond to this surge. Will you be able to capitalize on the opportunities presented by the surge in copper prices, or will you fall behind? We'll reveal the actionable steps you can take to protect your portfolio and make the most of this new development. Specifically, in the next section, we'll explore how to diversify your portfolio to include investments in industries that are less reliant on copper and how to invest in companies that produce copper. For example, we'll discuss how a $10,000 investment in a copper-producing company could potentially yield a 15% return, resulting in a $1,500 profit. Stay tuned to find out how to navigate this new landscape and make informed investment decisions that will help you achieve your financial goals. So, how can you respond to the surge in copper prices? One strategy is to diversify your portfolio to include investments in industries that are less reliant on copper. Another strategy is to consider investing in companies that produce copper, such as Freeport-McMoRan or Rio Tinto. According to a report by CNBC, the copper market is expected to experience a significant increase in demand in the next 5 years, driven by the growth of the electric vehicle industry. For example, a $10,000 investment in a copper-producing company could potentially yield a 15% return, resulting in a $1,500 profit. And the contrarian view is that the surge in copper prices is not sustainable and that the price will eventually decrease. But the historical parallel is interesting. In 2008, the price of copper decreased by 50% in a matter of months, resulting in significant losses for investors. So, what's the actionable next step? You should consider consulting with a financial advisor to determine the best strategy for your portfolio. Additionally, the surge in copper prices could lead to an increase in the production of other metals, such as aluminum or steel. For instance, a company like Alcoa, which produces aluminum, could see an increase in its revenue due to the surge in copper prices. Furthermore, a common misconception is that the surge in copper prices will only affect the stock market, but in reality, it will have a broader impact on the economy. For example, the surge in copper prices could lead to an increase in the cost of goods and services, which could impact inflation. Back in 2011, the price of copper reached a high of $10,000 per ton, and the inflation rate increased by 2% in the following year. Now, with the current surge in copper prices, investors may want to consider taking a proactive approach to managing inflation risk. In conclusion, the surge in copper prices is a significant development that could have a major impact on your investments. The key takeaway is that you should consider diversifying your portfolio to include investments in industries that are less reliant on copper. One actionable next step is to consult with a financial advisor to determine the best strategy for your portfolio. Additionally, you may want to consider investing in companies that produce copper or diversifying your portfolio to include investments in industries that are less reliant on copper. This is for education, not financial advice. Talk to a fiduciary for your situation. If this changed how you think about copper prices, hit subscribe. I break down one of these every week. And, as a final thought, remember that the surge in copper prices is not just a US phenomenon, but a global one, and it's essential to consider the broader implications for your investments and the overall economy. To recap, the surge in copper prices could have a significant impact on your portfolio, and it's essential to take a proactive approach to managing this risk. Consider diversifying your portfolio, investing in companies that produce copper, and taking a long-term view of the market. By taking these steps, you can help protect your investments and achieve